Hey, how's it going, everyone? So today I really want to talk to you about the stock market. Obviously, there's been some interesting stuff going on over the last couple of days and even a week, and so I want to kind of go over this. So if you haven't already heard, the market has gone down pretty significantly over this last week, so that can put a lot of people into this fear thought process of having to sell their stocks, and I want to talk to you guys about that today. Now, if you are new to this channel, my name is Dennis, and we love talking about ways to make money, save money, and of course, invest money like this here today. So thought it'd be a good idea to just kind of come in here and put this video together. So I'm not really like planning it all out. I'm literally just going to kind of hop onto my portfolio, talk a little bit about some stuff, just because I think this is really important to note and put out as soon as possible, because people have a ton of fear when the market starts going down. And I know sometimes people mention this and it's kind of a little hard to understand. So I thought if I brought up my portfolio, we can kind of get a better visual of what I talk about when it comes to being excited, or at least not crazy fearful when the market is going down. So I'm going to go ahead and show you guys my Robinhood portfolio as well as my M1 Finance portfolio. But what I'm going to do too is I'm going to show you that I'm still currently investing into my M1 Finance, but I'm still going to be investing even when the market is going down. If anything, I'm actually trying to put more money in during this time, and I'll show you guys what I mean by that, because honestly, it might seem fearful, but the only way you actually lose money in the market is when you sell. So keep that in mind as we go through this, that if your money has gone down 10, even 15% at some point, you don't lose that money until you actually sell out of your positions of the shares or the ETFs that you actually have ownership in. So what we're going to do is we're going to go ahead and jump onto my M1 Finance portfolio first. Again, I want to show you guys this because a lot of people get really excited to share their portfolios when it's all doing good, but nobody likes to show it when it's doing bad. So that's what we're going to do here, show you kind of the bad part when it comes to investing. It's not necessarily bad. If anything, it's actually could be a huge advantage for you if you actually pay attention to this stuff, and we'll go over that again here in just a moment. So my portfolio over the last day has gone down about 4.69%, kind of close to where the market was. Over the last week, it's gone down 10.28%. And then in the last month, it is now actually down 7.39%. So pretty significant drop. The day I'm recording this is February 27th. So it was a huge drop for the day. But I want to show you guys too here in my activities feed. You can see here February 26th, I actually still placed my order for trades. And this was actually on top of my weekly investing that I normally do, which was back on the 24th of February. So I am actually still investing in the market, even though it's going down. Now, that might seem counterintuitive for a lot of people, but the biggest way to explain it to people is that when you are buying things while they're going down, it's kind of like you're buying things on sale. Because I'm going to show you here in just a moment with my Robinhood portfolio, because it's a little easier to show you. So we're going to switch over here. This is my Robinhood portfolio. It's not doing very well right now. This is a little bit more of a growth portfolio. So if you see the numbers a little bit bigger, that's part of the reason why. So this portfolio has actually gone down almost 6%, so a little bit more than the market overall. And then for the last week, it's gone down about 12.9%, which is about $89.63. For a lot of people, that's, gut wrenching, even for $89 or 12% of your portfolio. But this is going to be something, that you have to come to acceptance of when it comes to investing for the long term. You're going to have these ups and downs, and you have to be prepared for them. So what I want to do is show you an example with a fund called VTI, which is a Vanguard fund, and it is actually the total market index fund. So this is going to be a really good way to kind of explain this and how it goes about. So the Vanguard Total Stock Market is a ETF, which, in case you don't know, that is essentially a combination of every single fund in the United States into this one fund as far as having ownership in them. So this really gives you a broad feel of how the market is overall doing. So this one pretty much, you're going to see here down, it says VTI tracks a cap-weighted index that measures the investable U.S. equity markets, encompassing the entire market cap spectrum. So yeah, pretty much all of them on there. I don't know if it tells you on here how many actual shares or how many actual companies are on there, but it is obviously all of them there. So what we're going to do is look at this really quick. So over the last day from the closing, you can see it's even down in the after hours. It's down about 4.38%, which is less than what my actual portfolio is doing. But again, that's a little bit more aggressive overall. If we look at the week, it's down 11.73%. And then if we go to the month, they're actually down 8.77%. Again, this is the overall market. Right, so what I want to do now is actually show you guys, if I go over to a year span, this is kind of how the year has gone. So if you've invested a year ago, you're actually still positive in your investments. So if you had one ownership into Vanguard total stock market, you can see here that the very first day from a year ago, it was at $143.76. So right now it is still above. Now, obviously the market can continue to go down. We don't know how it works. It can actually go back up. It can go continuously down. It's just all a matter of what ends up happening, and we had to let that play out. Now, real quick, before we actually continue on, do me a favor and hit that like button down below. It really does help out the channel and the YouTube algorithm. I appreciate it. And this is the big thing I want to show everybody. So if we go to the 5-year marker, it's a little easier to tell. So you're going to see a lot of up and downs here on the overall graph right here. But over time, the market is always going back up. And the reason I want to mention this is because if the market doesn't go back up, especially the total stock market, if it never goes back up, then we have a lot of other problems than just, the money and the value of our amounts that are in investments. We have so many other things to worry about at that point, because that means all of the companies, everybody in the overall market in the US is not doing well if we can't get back to where we were prior to the market going back down. Now, this only goes to 5 years. So I went on to seekingalpha.com, and I also brought up the same fund right here. I got to just kind of slide it. It's a little cut off right there for us. But you can see here, this is for the total when it started back in 2001. You can see here, a lot of people know the 2008 recession. So we have it right over here where it dipped, and then you can see it eventually came back over time. Yes, it took a while for that to happen. But if you are investing for the long term, 5, 10, 20 years, that is not going to worry you at all, because you know that it's eventually going to go back up. Now, here's the big thing. If you plan on investing for a long time and you want to keep on buying in, even if you don't know when the bottom's going to hit, because we never also know when the bottom's going to hit, you effectively are almost buying things at a discount. And I'll show you what I mean here, right? So a year ago, if we go back onto this Vanguard portfolio, you can see here, if we bought this a year ago, it was that It was $143.76. And at some point, it got all the way up to, where was this high at? 172.17, which is a really nice, high point for this fund. Now, with it dropping all the way down to $150, let's say it bottoms out right there, and you buy one stock here at $150, and eventually it goes back up to $172, because we know that over time it will go back up to that point and grow past that as well, then you are buying at a discounted rate. It's as if you went to Target and you saw something that you really wanted to buy and it was 10% off. Not necessarily saying that you have to be buying it, obviously, but what it's saying is that now you're getting something that you wanted for less. So if this was a fund that you wanted and this was something you wanted to buy into, buying it at the $150 is going to be cheaper than if you were sitting there waiting for it, depending on how it was going to work, if you were worried that it was ever going to come back, and you missed out and it grew back up to 172. Now, for a lot of people, they might remember that in 2018, we had a pretty big dip in the end of the year. So we can kind of go back and look at this as well, too. So where were we? Let's go back here. The end of 2018. All right, so right over here, this was the dip in the end of 2018. So you can see here there was a high of $151.16. So that was the highest at that point. And then by the end of this drop, it went all the way down to $123.49. So anybody that was already buying at this point and was enjoying the fund and really liked being a part of it, and seeing that fund go all the way down to $123 meant that they were able to buy more portions of that fund because it was cheaper for them to buy into than it was at their highest point, which was the 151. And you can see here, even to this day, it is now just a little bit under where that high was back in, September of 2018. But if you look here, all the way back, the lowest it's ever been in the last 5 years was $95.26 back in February of 2016. So if you're in it for the long haul, you have definitely a much bigger advantage of wanting to continue to buy into a fund if you're already part of it, or if there were funds that you were interested in, it's a good time to start buying. Now, like I mentioned, I don't know when the market's going to go down. I don't know if it's going to continue to go down or if it hit its plateau and then it's going to start going back up. We just never know that kind of information. So for me personally, I'm going to plan on to invest every single week as I normally do. But if there's opportunities with big dips, I'll definitely go in and continue to add even more than what I had before. Now, you might have heard a lot of other creators or maybe other people talking about having, cash on hand or being cash heavy. This is part of the reason why they talk about this. It's because they wanted to make sure that they're doing the regular investments, but holding a little bit more of their money back. So when something does drop, they can essentially buy at that discounted price. Now, having that idea of when it's going to go back up can be a really tough thing because you don't want to miss out on the opportunities of buying it as cheap as possible, but you also don't want the opportunity to be missed because the stock starts going back up. Maybe it shoots back up. As much as having a 5% drop in one day, it can go up 5% in one day as well too. Now, of course, with current events going on in the world, that does change things up quite a bit. But at the end of the day, if you are in it for the long term, honestly, when you are still investing like you normally do, or you up your investing even just a little bit more because now you're buying things at a cheaper rate, it might be advantageous for you to start putting a little bit more, whether it's for retirement, your taxable fund, whatever the case. Like I showed you guys earlier, I'm still investing. I'm actually putting a little bit more money into my investments right now because I do want to be buying at these discounted prices that essentially these stocks are going to, because I believe in the companies that I'm investing in and or the funds that I'm already part of as well too. So keep that in mind. Let me know in the comments down below. Are you somebody who's a little bit fearful when it comes to the market going down? Or are you somebody like me who is really excited when the market goes down so that way they can buy things at a discounted price? And there's definitely no wrong answer, but I think if you are in it for the long haul, not selling your stock at the worst case is probably your best option, but that is just something I would personally do when it comes to investing in the market. Now, if you want to keep on learning more with the stock market, check out my video here where I talk about dividend investing and why I personally love investing with dividends.